Hello everybody, this is Margaret Yang from CMC Markets. Today we are going to take a pre-look of the Federal's rate cut decision on this Thursday morning Singapore time, as this is one of the most important events for currency and equity traders this week. So first of all, let's take a look at market expectation. So when it comes to Fed cut decisions, I always refer to CME Group's Fed Watch tool to see how much percentage has that been priced into the futures market. So right now, the upcoming FOMC meeting will be on 30th October US time, which is 2 a.m. Singapore time on this Thursday morning. So right now, the market is pricing in almost 95% likelihood of a rate cut by 25 bips on this meeting, and only 5% assume that the Fed will hold the rate unchanged. So this is a very much priced in event, and that could also explain the rally in the equity market this week. We saw that on Monday, S&P 500 index closed at record new high of 3,040 points. This is the highest level ever, and this rally was very much driven by the trade optimism, a decent U.S. earnings, as well as rate cut expectation. So I think that the Fed will have no choice but to cut. Otherwise, it will disappoint the whole equity market and investors, and also maybe the President Trump, as he always encouraged Fed to cut down rates faster and deeper in order to boost the economy growth. But if you ask me, why is Fed cutting rates 3 times this year down the road when the unemployment rate is at record low and the U.S. economy is performing better than the rest of the world and inflation is mild? I couldn't answer that. Honestly saying, I think Fed shouldn't do so and reserve some of the dry powder to the future recession or economic crisis or financial crisis. But now it seems like they are trying to boost the economy and prevent the recession from happening. So cutting down rates already 2 times this year, and they're going to do one more time this week. And it's very important for currency traders. Let's take a look at euro dollar. So recently we saw that euro has rebounded quite a bit against the dollar, and now entered into a consolidation period. So if we draw this huge Fibonacci retracement, it seems like there is a resistance level at 1.118, which is 61.8% Fibonacci retracement, and that is why the euro dollar has almost hit this level and start to retrace. So if Fed is going to cut down rate by 25 bips this Thursday morning, we might see that euro strengthen against the dollar. But the reverse could happen as well, because market has already priced in that. So we might see buy on expectation and a sell on the fact happening again on Thursday. So do watch out. Euro dollar is going to be very volatile at the moment of FOMC announcement. Okay, and then we can also take a look at gold price, which is now in a consolidation phase. So theoretically, rate cut should be a booster for gold prices, because when interest rate goes lower, the opportunity cost of holding gold is decreasing, which makes gold a more favorable investment product for investors. And also, as more money is created by the central bank or printed by central bank, the purchasing power of paper money is ever decreasing, which makes gold as a hard asset and a good preservation of value in the long term. So a rate cut should, by right, benefit gold price, and it should move up from here. But if the reverse is happening, say Fed is holding back rate cut, then market may enter into a panic sell-off, and which will likely drive up the gold price as well. So technically saying, gold is in a consolidation phase, as suggested by Super Trend 10 and 2. Okay, so super trend is now in a bearish setup. Unless gold price break out above $1,520 and stay above that, then the super trend will switch side to the bullish setup. So unless that is happening, I think gold will continue to consolidate. And in the Fibonacci retracement, we are also seeing that 1488 is a key support level for gold price. And if this level is broken down, then gold price may continue to consolidate until 1448, the next Fibonacci retracement level. All right. So how do I look at what's happening in the market? What's the calendar? Let me show you here. So this is the calendar. We can actually select the importance of this market event by clicking highly important, medium, and low importance. Okay, and then we can select the country that you are concerned with, and then you can choose a horizon between day, week, and month. So for example, here I choose daily, and today's Tuesday. The calendar is not too busy, but tomorrow, wow, we have a lot of events coming out from Australia CPI inflation data, followed by Germany employment data, and then US ADP. It's like a mini non-farm payroll report, followed by GDP reading for the third quarter, and then we have interest rate announcement from Canada and US crude oil inventory data. And shortly after that, on Thursday morning, you see that 2 a.m. we have the FOMC meeting policy decision coming out, which is a key event. And then on this Friday, we have another key event coming out, which is non-farm payroll. The forecast for non-farm payroll this month is pretty low, only 85,000. I think market has purposely adjusted that expectation lower to give some cushion to the market, as the economy is slowing down, especially in the manufacturing sector, which we see a global cyclical downturn. So from this trend, we see that the new jobs created by the U.S. market is shrinking over the months this year, and this event is less significant now because the Fed cut decision came 2 days before the non-farm payroll come out, but still it may trigger some volatility in dollar pairs as well as gold and the US indices. All right, before we end, just one more thing. Let's come back to the US S&P 500 index. So we have likely broken out above this key level of $3,024, which has been tested 3 times, and finally it was broken out last night. And I have read a report recently based on a bottom-up analysis, and it suggested that S&P 500 index can go up to 3,320 points in the next 12 months. Barring any economic recession or unpredicted events, if everything goes well, then there are another 10% room for the S&P to go up based on bottom-up analysis. So, all right, that's all for today's FOMC preview, and I hope that all of you enjoy trading. Thank you.